Welcome to my channel. I'm the cover call guy, and my goal is to create a $120,000 per year passive income portfolio using only cover call ETFs. My portfolio currently yields about $70,000 a year and about $6,000 a month. Um, this is gonna be a great video today, guys. If you liked this type of format, leave me a comment, subscribe, like, and let me know what you want to see next. I'll do videos on requested videos. Yeah, on the comments, do request, you know what I mean. If you like something like this, let me know. I'll do more of it. And if you want to see something, another cover call versus cover call, fun versus fun, let me know. Legal disclaimer before we start. This content is for informational and educational purposes only and is not financial advice. I am not a licensed financial advisor or tax professional. All opinions are my own and may be incorrect. Trading and investing involve risks, including loss of principal. Please always do your own research. My research may be wrong. This video may be wrong. Consult a licensed professional before making any financial decisions. I am just some random idiot you found online, and I could be completely wrong. So with that out the way, let's get it started. On today's video is going to be Roundhill versus YieldMax. In another name where I saw online, is it Garbage Hill or Erosion Max? We'll see. This is the weekly income ETF showdown. Total return versus maximum yield. Let's get started. All right, at a glance of these two titans of income, one Roundhill is the strategic innovator, provides tool for leverage, tax deferred accumulation, focus on total return, which is growth plus income, offers uncapped upside via leverage funds, employs a proactive designed tax deferred strategy. And then versus YieldMax, which is the pure income engine, right? YieldMax provided a machine for high value and cash distribution, focuses on a maximum current income, caps all upside to generate yield, right? Yield at all costs, income by all means necessary. ROC is a consequence of NAV erosion, right? In the world of income focused ETFs, two innovators have emerged with fundamentally different philosophies. Roundhill investment champions tax-efficient leverage and total return, while YieldMax ETF focused on generating the highest possible current income. Right, so this comparison breaks down the strategies, products, and who wins in which scenario. All right. Combatant 1, the Roundhill Fund, the strategic total return innovator. Core philosophy, right? We always got to read the perspectives, right? Those perspectives will always tell us what they're thinking, what their goal is, what their strategy is, how they're going to execute, right? They're giving you their playbook. So if they're not going by their playbook, that's a red flag, right? If they're going by their playbook, that's a green flag. They're doing exactly what they're going to say. They're not being sneaky about it, So their Roundhill strategic goal is to first market access, right? Thematic, which means thematic is more just the hype, the trend, the memes, right? So they give what the people want, what the people are currently going after, buying. Is that a bad thing? Is that a good thing? That's really up to the investor. That's really up to you, right? Are you gonna buy the latest and hottest trend? That's what Roundhill is doing, right? If there's a meme product that's meme stock or whatever that is hot right now, they're gonna make an ETF for it. They're gonna make a stock for it. So that's what thematic means. Leverage, 120% weekly total return via leverage ETFs such as TSLY and WPay, right? And then income, 0 date time expiration, index volatility such as QDTE, and then tax efficiency, 100 proactive 100% ROC funds like XPay. All right, so the prospectus and risk warning: not suitable for all investors, only suitable for knowledgeable investors, requires active monitoring and management. Right, total loss risk 83.33% weekly drop can wipe out 100% of value, such as this one is speaking about leverage. So if the fund drops anywhere around 80%, the entire leverage fund will get liquidated, gone, poof, delisted, absolutely destroyed. It goes to zero. right? Their philosophy: uncapped growth plus income. That is their goal. Roundhill's core income strategy, pioneered in 2024, is built on two pillars: 0 day to expiration cover calls on major index like XDTE and QDTE, and the weekly pay series, right? This approach aims to capture daily income, while their leverage funds provide 120% of the underlying stock's weekly performance, offering uncapped upside. They have a total of 10 billion and 26 uh, 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 26 million. Lost my train of thought there. And total assets under management, and I think they have about 44 ETFs. I'm not sure if they're releasing more. They have released more, or they're in plans of releasing more. I know YieldMax is releasing more as of this week of the second week of November, I believe. I got I put 44 because I know they're trying to release a few more. Maybe they have around like 49 or 50. So I just put 44 for sure. That's out there. All right, next slide. Roundhill, the arsenal, right? What does the fund hold? I believe I try to list as much as possible, right? They have mags, they have meme, they have METV. Those are the medics, right? Payout is annually, okay? Annually, you get paid once a year. Then they have their leverage daily stock, which is their payout. I think this one, I'm not too sure if this one has been, if they stopped the payout. I know some payouts have been stopped. I know meme doesn't pay out, but it still says annually on the website. But I think they stopped the payment. Just double check and fact check me on those. I'm pretty sure meme has stopped their payout, but on the website it says annually. Anyways, their leverage daily has been stopped, which is MagX, and then we get into their leverage weekly pay, which are the new releases, right? The newest one I believe was WPay. So TSLW, NVDW, COIW, PLTW, MSTW, and HOOW, and WPay, right? I believe, yeah, WPay is the latest release, yeah, and they all pay weekly. I'm not sure when they pay. I should have put that. I didn't have enough. I couldn't fit everything. I apologize for that. I tried. As you can see, I had to scroll. I tried to put everything on a slide. It just didn't fit well. But these are all the leverage weeklies. And WPay is a little bit different because there's a funds of fund, and everything else is a single stock leverage stock. So it has a little bit more risk to it because it is a single stock, where this is a fund of fund, whereas pretty much it holds all of whatever Roundhill gets to pick and choose in it. And then we go to part 2 of the arsenal, right? We have the 0 date expiration cover calls such as XDTE, QDTE, RDTE, and they also pay weekly. And then they have their options income for crypto, YBTC and YETF. So they both have Bitcoin and ETH, and they also pay weekly. Then we have their tax advantage, XPay, XDIV. These are their, I guess, their more tax advantage ETFs. And then they have their cash management, which is the week, which invest in treasuries. And then they have the other income, which is their cover. This is their traditional. I put other because this is I think this is their only traditional cover call. Disclosure: I do own Maggie. It is going to be a $150,000 to $170,000, $75,000 position that I'm building up. So disclaimer: I do own Maggie. However, I'm not going to be biased around with Roundhill. I could end up selling all of Maggie if Roundhill decides to not do what they're supposed to do. So I just want to put it out there that this video is not about Roundhill and all the glory. It's just Maggie right now is one of my favorite weekly ETFs. I'm trying to find a replacement. I'm sorry. not a replacement. I'm trying to add at least 2 more weekly ETFs. However, I just can't find the weekly ETFs that can hold its ground right now. I have a few on my watch list, but right now Maggie is my only weekly ETF, and it is my core weekly ETF that I think I'm going to be holding on for decades, because I don't think Mag 7 is going to go away. So yep. Okay. All right. On to the next. Combatant number 2, YieldMax ETF, the maximum income engine. Let's take a look at YieldMax. All right, so YieldMax, the maximum income king philosophy, right? The strategic goal is income by all means. Primary objective is current income. Rejects slow dividends for max cash flow. Price principal risk. Upside is explicitly capped by selling calls, right? The core risk is complete NAV erosion. Repetitive distribution may significantly erode NAV. Asymmetric ratchet, which just means capped upside, and full downside. So you are pretty much, you can't jump any higher with the stock prices, but you can feel full pain going down, like the past today, in the past 2-3 days, the market has just been slipping down, so you will feel the full pain of it, the full weight of those red days. And then, of course, return of capital is right now destructive, right? A return of your own eroding principal. So those are the core risks. Their philosophy: max yield via volatility. Oh, I can't talk today, or whatever. Max yield entire focus is generating the highest possible current income. They achieve this with a synthetic cover call strategy on high volatility. Volatility. Oh, whatever, guys. You know what I mean. You guys can read it. All right. Single stocks. This maximize option premium, but explicitly caps the upside potential, making a pure income play. They have about 49 total ETFs. I know they're releasing a few more. I should have put that here, but again, I just have a lot of slides and not enough space. Their peak yield is actually, some of them are over 100%. So in investing $100 will get you $100, and if it's over $100, investing $100 can get you $110. However, the NAV, right? So just because you're getting $110 back, right? If the stock goes down by $110, I'm just using an example here. I don't think they have a stock that's $110 unless they keep doing these reverse splits. But that means nothing. Anyway, I'm all going off topic here. But you guys get my point here. It doesn't matter if you are getting 300%, right? If the stock goes down, I don't think it can go down 300. Well, 100% would be zero. But you get me, right? If it goes down to basically nothing, zero, you guys are absolutely getting screwed. All right, and this is their arsenal, right? So their flagship single stock income. TSOY, NVDY, MSTY, CONY, APLY, AMZY, GOY, MSFO, FBY, OARK, YBIT, and etc. And I have 40 more that I couldn't fit in list. It will be like 10 slides here. But you guys can find on the website. They all the one that I mentioned, and every single one of their stock pays weekly. Part 2, of course, I did not miss everything, right? They have their 0-day expiration, just like Roundhill, QDTY, SDTY, RDTY. It also pays weekly. Then they have their funds of funds, such as Roundhill, the funds of fund, YMAX and YMAG, right? So YMAG does pretty much the Mag 7. It's comparable in terms of what it holds and what it pays. To Maggie. However, Maggie is not a funds of fund. Then we have the ultra and the shorts. The most popular one, ULTY, SLTY, and then they have these 4 over here. CRSH, DIPS, Fiat, WNTR, YQQQ. They also pay weekly. I believe all of them pay weekly. So which one do you guys own? If you guys are in the YieldMax community. Let me know how it's been treating you. Let me know if you're interested in the new stock that's being released. I'm very, very interested in that new stock that they're releasing, because they are trying to improve. I see that. I hear it. People are finally starting to realize that YieldMax is uninvestable if they do not change their strategy and their structural cover call layout and their game plan, right? So I believe YieldMax is finally starting to hear the noise and feel the pain. They're probably now going to figure out how to protect the NAV, or at least make it stable. So high hopes for YieldMax. All right, now we go head to head. The fun battles, a clash of thesis, structure, and tax. Right, head to head, the core tax conflict, return of capital. Roundhill, return of capital by design, is a proactive strategy targeting 100% tax deferred, which means it reduces your cost basis. Taxes deferred until sale. Distribution are not counted as income for the forgot, I should have IRMAA. That's income related monthly adjustment amount. This is important when you guys are retired and completely you stop working, and this is important for all the retirees that are trying to get on what is it, Medicare, or is it Medicaid? Well, whatever, which one is for the elderly, for my elderly viewers. And it is ideal for high tax states and taxable incomes. Versus YieldMax, right? Return of capital is by consequence, and what that means is it's just an accounting reality of NAV erosion, which is just returning your own principal. What it distributes are very unpredictable mix, right? ROC income gains, non-ROC portions can increase MAD-G and IRMAA. MAD-G is your income levels. Let me just double check with that. Yes, I am correct on that. I just lost my train of thought. I should have, instead of putting too much abbreviations here. MAD-G is modified adjusted gross income, and that is also very, very important for those who are retired or the elderly. You're trying to get into Medicaid, Medicare. All right, so ROC does not count as of now. So 100% return of income would not count against you, which is a good thing. We want that. Right, we want that subsidy. We want that government, for the government to be paying for our healthcare, right? Because if you get onto a plan, it's crazy expensive. I've been on Cobra. All these plans are it's crazy expensive, anywhere from $500 to like $3,000 a month, depending on what plan you pick. Absolutely insane. Anyways, and it is also best suited for tax deferred accounts like IRAs for the YieldMax. Head to head, single stock, we do a comparison with MSTW versus MISTI, right? Roundhill, MSTW, thesis, extremely bullish. If you're buying this, their strategy is 100% leverage weekly returns. Upside is uncapped and amplified. Downside is 120% total loss possible, right? So your downside is also amplified and uncapped. Use case, you are long-term tax sensitive bull, right? Versus the YieldMax, you would buy YieldMax instead of Roundhouse for this cover call, which is if you were to choose between the two. Thesis, you harvest volatility, right? Strategy, synthetic cover call. Upside is capped, sold for income. Downside is 100% minus premiums. Use case, you want cash, not price appreciation. So if anybody owns this, let me know if you have gone through this and this is what you decided with. If you decided with YieldMax or Roundhill, if you own any of this, let me know. I really appreciate you guys leaving comments to educate me. So let me know how it's been treating you. All right, 0 date expirations, cover calls, QDTE versus QDTY. Roundhill, QDTE. Their structure is a quote-unquote a cleaner synthetic, right? Uses deep in the money, calls appear 1 point delta proxy for the index, and proactive tax deferred strategy versus the YieldMax QDTY. Their structure is a 30-year synthetic, which uses a long combo buy, call, sell, put. The sell put introduces a different risk, right? That's the reason why it's a little bit 30-year. Applies max income philosophy and consequential tax. So if anybody owns it, did you guys choose Roundhill for that? Did you guys choose Max YieldMax for this reason? Let me know, please. I'm very interested. And then the funds of funds, WPay versus YMAX, right? Roundhill's WPay, the thesis is leverage growth basket, holds a basket of 120% leverage funds, a one ticker bet on total return, tax efficient rock distribution. Versus the YieldMax, YMAX, the thesis is max income basket, holds a basket of capped upside funds, a one ticker bet on maximum cash flow. Trailing 12-month is about 60% as of late 2025. So guys, if you guys own any of this, both of this, how has it been treating you? Let me know, please, because I am actually interested in one of these leverage weekly ETFs. All right, then we just do a market scenario analysis. This is, again, illustrative total return in a bull market, in a sideways market, in a bear market, as you can see. In a bull market, Roundhill absolutely destroys with MSTW. And in sideways markets, YieldMax crushes Roundhill, right? Misty destroys MSTW. And in a bear market, YieldMax has less of a YieldMax has a better buffer compared to Roundhill. So it seems like if you are very, very bullish, Roundhill is the way to go. If in choppy market, sideways markets, YieldMax hold his own. In a bear market, YieldMax definitely has a better cushion. All right, warning labels. Who should not invest in this? Right, this is again my opinion. I think you should not invest in Roundhill weekly pay ETFs if you believe the stock will decline or trade flat, leverage amplified losses. Right. If you cannot tolerate 83.3% 1 week loss scenario, very, very highly unlikely, but again, anything can happen. If it gets close to the 80%, the weekly leverage ETFs from Roundhill will absolutely get liquidated. No questions asked. They're gone. They're not going to hold that any longer. They're going to try to scalp as much assets as much as possible. That way they can at least hold on to something and maybe open up another ETF. Do not invest in Roundhill if you do not actively monitor your positions, right? If you're someone like me trying to sip some nice champagne on the beach somewhere in a nice warm tropical country, right? The Roundhill is not for you, not for me. I'm trying to enjoy myself somewhere in a nice sleeping in a nice high rise, right? I like to go on trips. I like to drive to do shopping, right? Roundhill might not be for me, right? I'm trying to live that nice luxury life. I'm trying to just buy, hold, and sit and forget. Never use YieldMax if you are bullish on the underlying stock price, because it looks like if you're bullish on Tesla, it looks like you should just buy Tesla because it might be up 10x versus TSOY and other YieldMax. However, the counter talk to that is investing in YieldMax means you don't care about growth. Just pay me the income. All right. Never use YieldMax if you want to capture upside moves. Right. You will miss them. You are measuring success by total return versus the stock. So if you guys agree, let me know. If you think this is a good solid point that I've put out, let me know. If you guys disagree, what I should have added, please, it will make my presentation and my videos going forward much better. I really appreciate you guys educating me. If you guys obviously hold these stocks and you think I'm wrong, so let me know, guys. I appreciate all comments. Love, hate, no spam, please. Love and hate comments. All right. My final verdict: strategic portfolio construction. Right, for the retired, I would prioritize Roundhill just because it's a more proactive 100% return of capital. It's not always guaranteed, but it looks like they're aiming for it, right? Because ROC is not counted as income, so it protects you from Medicare premium hikes, right? So you are fully funded and paid for by the government, right? If you make $120,000 that year, but because it's 100% return of capital, that income You didn't earn anything, right? How great is that? I would love that. Oh my god. Anyways, for the tax deferred, YieldMax is acceptable here. Roundhill's tax advantage is wasted. You can focus purely on maximum income generation if that is your goal. For taxable accounts, Roundhill again dominate. The tax deferred of its rock by design structure provides a clear, efficient path for accumulation. So guys, do you agree here? Do you disagree? It looks like YieldMax is only acceptable for some tax deferred account, unless you are only caring about just pure maximum income. Then it's not. Then it will be for a taxable account. All right, my final recommendation matrix. Right, there is no single winner. I don't believe there is a single winner here. It is just dependent on your goal. All right, are you bullish on the underlying asset? Yes, choose Roundhill. No, let's go to question 2. Do you need maximum current cash flow? Yes, choose YieldMax. No, go to question 3. Are you a high tax bracket or IRMAA sensitive? Yes, choose Roundhill. Right, Roundhill would fit better for that because of its return on capital, right? The IRMAA bracket is what is used to determine the Medicaid. There's like 4 parts of the Medicaid, right? It just depends what you fit in. So the less income you have, the more subsidies you're going to be able to get from the government, right? Or completely free, right? No, go to question 4. Is this a taxable account? I would go with Roundhill if it is. No, then I would go for some taxable where YieldMax is acceptable. Let me know if you guys agree with this or not, or again, this is just my opinion, right? The right choice depends entirely on your goal, tax situation, and market outlook, right? Your age. YieldMax might be much better for anyone who's already 55, 60, 65, right? Whereas Roundhill might fit more for someone who's very, very bullish and has time, that's younger. All right, and that's it. Subscribe, comment, like. I hope this was very, very educational or brought some light to you guys. If you guys like these type of videos where you want me to make videos where one ETF is going against another or another fund going against another, let me know. Please comment. Let me know if you guys think this is a good setup. My next video will be a ETF that if you want to invest like Warren Buffett, let me know because that will be on the next video. Thanks for watching, guys. Stay tuned. Catch you guys on the next.